All righty, welcome. It is Sunday, the 7th of May. So welcome to the 3 trades this week segment. I'll give you 3 potential trades for this week based upon what we're seeing in the markets. Let's take a look at where things are in the market really quick. Up on the screen, we have ES. I like to look at a monthly, weekly, and daily time frame here just to give me a sense of where things are. On the ES, if we took a look here on the weekly, we've got MACD reversing, moving higher. We've got the squeeze momentum switching and moving higher, and we've got the stochastic momentum indicator moving higher, and that pretty much mirrors what we're seeing in the markets over the last several months or so. All the way since that October low that we've hit, we've been marching higher on the monthly. So we've been bullish in a bullish trend here on the monthly. Taking a look at the weekly, we're starting to get a bit toppy. So you can see MACD starting to roll over maybe. Squeeze also starting to tip over, moving from that light blue to dark blue. And then the stochastic momentum starting to get a little toppy here, which indicates some topping action when we may head lower. So we've dropped down on the weekly all the way to that 21 EMA, 50 EMA, bounced off of that for the week last week, but couldn't break through this zone up in the top here. So you've got a supply zone that we hit into, running into that, and we have not been able to break through that area. So we've once again failed at that mark. And then looking at the daily as well, you've got a little bit of a downtrend going on in here, but MACD did reverse higher on Friday with that up move on Friday. Stochastic momentum also reversing its downtrend here a bit, and the squeeze also looking to potentially reverse, but was definitely in a downward trend for the last week or two. All right, so that's where we are on ES. We'll take a quick look at the NASDAQ. We're not going to see a whole lot of difference here. Everything on the monthly looking solid at this point in time. The weekly moving up, but getting toppy, but not turning over quite yet. And then on the daily, yeah, pretty mixed. We are in a squeeze here, but we might be firing higher. So tech doing well overall, as we have seen. Let's look at some of the futures that we get into here. So oil's been in just a nasty down move here from about this I'll call it this 122 level all the way down to 70 or so here, and we touched a low of 64 even this week, but we bounced off of that. But oil in this downtrend, nothing here indicates much different except stochastic momentum starting to turn up. So are we finding a base or a bottom in oil? And we're right here at this 50% retracement on the fib levels, moving higher from this February of 2020 or April 2020 move higher. If we look at the weekly, just been in a solid downtrend now since June of last year. And then on the daily, where we've been really oscillating back and forth, we really tipped over hard here when this stochastic momentum crossed, is where it started to begin. But you could see MACD really reversed right in here. So the TTM squeeze reversed right here on the 17th of April, and that's when we started to crack back down through the 40 on the stochastic momentum. So you can also see the white dots here being the PSAR reversal signals. You got that reversal signal right here on the 19th, which pretty close to matched up with everything here. I think we knew it was coming a day or so before that happened, and it's been in a good downtrend for us. But now we might be rebounding, a pretty nice reversal looking candle there. So that may also figure into our trades this week. So we are going to be looking at a oil futures trade as well. Let's take a look at gold. On the monthly here, gold's been in a decent uptrend. It reversed back here in December and has been really munching higher since then. All of the MAs are stacked on the monthly in its uptrend, bounced right off of its uptrend line, looking good. Here on the weekly, you've started to see it tipping over a bit on the weekly, which is all good. So monthly, very bullish. Weekly tipping over a bit, so it just might be due for a little bit of a pullback, maybe down into this 1900, maybe 1850 range. I think 1800 is a good looking bottom, or a good looking support level, I should say, maybe on gold. And then we can, I think, reverse higher. And then on the daily chart here, I mean, it's really been on a tear all the way from really 1811 all the way up to 2085 or so that we hit on Thursday here before selling off on the big up move on Friday. I think gold has become, again, a bit of a safe haven. The indicators are pretty bullish on the daily, fairly bearish on the weekly, and bullish on the monthly. So we're right a little bit in a tricky spot for gold. I think if the market rallies here for a bit, gold's going to sell off, which is what we're thinking of happening on the weekly before I think the market really starts to head south, which is my goal for the third quarter, is that we really start to sell pretty heavily in this market in the third quarter, where gold, I think, could really, really rally high here. But we're going to put on a gold trade as well, looking at these pieces. So we've looked at the ES and the overall S&P market. We've looked at oil. We've looked at gold. We'll skip through most of the other trades here as we just take a quick look here at the euro. Before we jump into the euros, take a look at the dollar. So the dollar has, on the monthly, the dollar's really come off of its highs quite a bit. You can see on the weekly here, the dollar's really been in a pretty good downtrend, really since the September, end of September, beginning of October of last year. So the dollar had its strong run, tailed off a bit. On the daily here, we might be starting to base out again. We are oversold monthly. We are oversold weekly. We're almost oversold daily. So I think the US dollar is getting close around this 100 level for basing out and reversing higher. What does that mean for the other futures? I think that means the euro here could be heading a little bit lower because it's been inverse of the dollar a bit. So I think we have some opportunities there. I think the Aussie dollar move here is already started to make its move higher. I think this is a really great strangle play, and we have a strangle on currently in the Aussie dollar for futures. And I think if we look at the British pound as well, or on 6B, it's also starting to get a bit overdone here, and I think we could see some potential weakness. But if the dollar continues to or starts to strengthen, then I think we're definitely going to see more weakness here. And I didn't want to spend the whole session here going through every different strategy, but let's take a quick look at technology. As we talked about, tech screaming higher on the monthly, the weekly, and really starting to turn back up on the daily here. Has had a really good run. Could keep going for a little bit, so we can stay extended here a little bit longer potentially, and then I think we see some selling in technology. If we take a look at the XLV here, and when you're looking at the XLV, it gives you a sense of what the healthcare look like as well. So the healthcare sector has been fairly muted for a while here. You can see it's been in this tight range on the monthly since the middle of 2021, just staying in that nice range. Been a really great strangle looking opportunity, but I think healthcare getting a little overdone on the weekly, and you can see it's mixed on the daily. So just really going nowhere on the healthcare. I'm going to look at the XLF quickly just to show you where financials are. We'll take a quick look and redo this downtrend line, but financials been in a nice downtrend, still showing that on the monthly. On the weekly, definitely some heavy selling. Tried to bounce a bit here, but I think we start to roll back over. But daily getting overdone a bit, so we'll keep an eye on it. But we're still in a very bearish mode on XLF. The XLE, though, been in a solid uptrend. You're really starting to get into a pretty tight area here where, I think we're looking for some sort of a breakout in either direction, up or down. So, we tried to break through on the downside a bit here on this uptrend, but you're really narrowing this triangle range, getting narrower. I think now that we're oversold here on the daily and we were coming down from overbought monthly and weekly, it's just a tug of war back and forth. And I think just more of the same for XLE and energy as we move sideways. And then take a quick look at a few stocks. Amazon's been in that solid downtrend monthly, but starting to reverse here the last couple months. Your stochastic momentum starting to point higher, getting a little overdone on this move, potentially on the weekly. And then the daily, we have sold off and then starting to turn back up. A lot of mixed. So you've got, a bearish overall PSAR signal here, but you've got some bullish signs monthly, but you've got, some bearish and bullish looking signs here and the weekly, and then you've got some, bearish on the PSAR, but you've got bullish potential reversal signals. So it's just a lot of mix on Amazon. We've got that synthetic stock on here, and we're selling covered calls. I think that's a perfect play for a stock that has no clue where it's going. All right, well, so without further ado, getting into any more different stocks, we can look at more on another play. Let's get into our 3 trades for the week. So first trade is going to be a 112 on gold futures. So we took a look at gold earlier. You've got a fairly mixed signal, but I think there's some downside ahead before it turns up. So because of that, we want to put on this 112 structure, which is a put debit spread of 1955, a 10 wide put debit spread financed by 2 far out of the money puts at 1855 for an overall over the weekend price of $4 credit on gold. So you're taking in roughly $400 on buying power of $7,611. And we're looking at the June 27th, which is 51 days. So if we stay up here in the tail, where we are square in the middle of 2, and we stay above that 1965 level, we stay above that, we're going to keep that $400 on the 7611 margin, which is going to give us a return of about, 5.3% return on margin in 51 days, which is pretty close to our 3% a month goal. So we will take that. We'll take that if we stay here. If we drop further and we get into this trap part here at all, well, then we're looking at quadrupling our returns almost to about $100 or $1,400 in that case, having a really fantastic return on this trade of somewhere around 18%. So I've got an 8.4% downside, so we can drop almost 10% in gold and still make good money on this trade. So this is what we'll be looking at in gold, putting on a 112 trade in gold based upon those mixed charts. Let's take a look at oil as well. So oil, because we've been oversold on the daily and the monthly, but weekly, looking a little weak, we could get a little bit of a bounce here off of, I think, some support around the upper 60, low 70s in oil here. So we're going to throw a strangle on out 71 days. Preferably for me, it's a 90 DTE strangle, but 71 will do in this case. We're going to do the 52.92 for a 77-cent credit. Oil is a 1,000 X multiplier, so that's going to bring us in $770 on margin of 2,700. This is why I love trading futures. You get such great leverage on these. So taking in 770 on buying power of 2,700, I'm looking for a 50% return on this, or a 2x stop loss, or 2x max loss, which would be a 3x stop loss. Downside on this, if this thing were to drop all the way down to 52 here, we have 27% room to the downside. So I feel pretty confident that we're going to stay above that. If we don't, I doubt that I would actually use this stop loss at all. I would be willing to take assignment at 52 on oil. I think it's a fantastic price on oil with China opening, summer driving season coming. China's also got a ton of tankers headed there as well, as they bring in more oil. I think OPEC's got those price cuts, and I don't think OPEC's going to let that price get down below 60 here before they start to do some cutting and do some cost measures here. So I love oil here on the upside, but I think this strangle is warranted because you got a lot of mixed signals. So we'll do this strangle. We'll look to take 50% out of this strangle. Typically, that's about a 30-day-ish trade or so. And then the last trade we'll do is we're going to put on a long-term 112. So 112s are a trade I came up with a couple years back. We've evolved it over the years. This is a long-term 112 on ES. So the ES S&P futures there. I'm going out to September 15th of this year, which is about 131 days. I like 120 as my target, but we'll go 131 on this. You've got a mixed chart, some daily mixed, weekly oversold, monthly strong. Who knows where we're going? So the 112 is going to give us a perfect opportunity. If we stay above this 38.50 put here, we're going to finish in a tail. We're going to take in, when we put this trade on at 25.25, ES has a 50 multiplier. So we're going to take in $1,262 on a margin of 8,065. So right off the bat, this is going to give us a 16% return if we stay above the trap, above 38.50 for the next 130 days or so. So if we stay higher, great, we make 16%. If we drop into this big fat trap, we have room all the way down to 30.50 here, which is a pretty lengthy downside. It's 26.5% drop in the market from here before we hit that. So our 31% that we're getting if we stay out of the trap is fantastic. We drop into the trap. Okay, now we're taking in, with the credit we received plus the results from the put debit spread, $3,760 on that buying power of 80.65. So overall, we're looking at about a 47% return if we drop into the trap, and we've got safety all the way down to 30.50. So this is what we're looking at for our 3 trades. So fantastic. There's our 3 trades for the week. Feel free to comment if you have questions. Let me know. If not, you can join up in the Mr. Tactic Income Navigator service. Watch us trade live there. We'll be looking to put some of these trades on this week. All right. Have a fantastic rest of your weekend, and we'll see everybody trading in the markets on Monday. Thanks, everybody.